Stocks are racing earlier gains on Friday as investors digested a crucial jobs report that provided clues to the size of this month's expected interest rate cut and the resilience of the economy. The economy, of course, adding 142,000 jobs in August. That trailed expectations. Prior month job growth was also revised lower as the labor market showed signs of continued cooling. The unemployment rate, however, did tick back down to 4.2%. As you might know, we're coming down to the wire in a presidential election amidst all of that. Here to tell us what this report means for both presidential candidates and the guy currently living in the White House is Yahoo Finance's Rick Newman. So what are the implications?
Odd things are happening. I mean, it's been a little bit of an opposite economy in the post-COVID world. So you just talked about the wipeout in the stock market this week. I mean, the stock market has had indigestion for the past 2 months. Even though the stock market got the jobs report it wanted, just a little bit below expectations, it cements that Federal Reserve interest rate cut, probably just 25. We're going to start gradual cutting. But there's a weird thing happening when you look at all the consumer confidence metrics, which is that consumers are feeling better, not worse. And Oxford Economics put out a note today declaring the vibe session is over. So why would ordinary people be feeling better as the labor market is softening and everybody's 401k plan has been going down for the last couple of weeks? I guess it's because inflation is just not really a problem anymore. People are just not thinking about it. I mean, we've been talking about this a lot for much of the last year. Inflation has been coming down, but people have remained very, very gloomy. So maybe what's happening is the inflation fever is breaking. So to put this in the context of the election, probably this is exactly where Kamala Harris would like to be. I mean, she is the de facto incumbent. And when you see confidence improving in the last 2 weeks prior to an election, I guess people think prices are finally stabilizing. They're probably getting the message that interest rates are coming down. So borrowing for a mortgage, borrowing to buy a car, it's going to get a little cheaper. But you got to wonder, like, if as the job market softens up, when is this actually going to start impacting confidence? I don't know if it'll be during the next 8 weeks before Election Day. I don't know if it'll be before Inauguration Day, but it seems like that might be coming.
Do we know, Rick, how people are feeling as it breaks down along ideological lines, meaning are Republicans, Democrats, Independents, is everybody feeling better?
Yeah, it's really interesting because there is definitely a partisan element to this. I mean, it's hard to understand why exactly because, the economy does what it does. I mean, it's not like Kamala Harris replaces Joe Biden as the Democratic candidate and suddenly, inflation falls by 50 basis points or something like that. But when Kamala Harris took over, economic optimism among Democrats went up considerably. I mean, it was not a statistical blip. I mean, it clearly went up. And as it looks more likely that Kamala Harris could become the next president, Republican confidence on the economy goes down a little bit. So yeah, there absolutely is a connection with politics here. I suppose it didn't used to be that way, but I guess even everything about the economy even is politicized these days.